Hello and welcome to episode 2 of the Craving Crypto podcast. This week's topic is Coinigy worth it? Pros and cons, and is it better than TradingView? So let's get right into this. Alright, so Craving Crypto episode 2, Coinigy review. So hit that like, that sub, and we'll just get right into the market overview. On coinmarketcap.com, we'll just go over and do the market capitalization. We do the top 5 coins, their price, their volume, and then we go over the total market cap, the volume, and discuss Bitcoin dominance and things like that. Bitcoin's total market capitalization is at $104,346,502,000 at $5 billion in 24 volume, and current price standing at $6,098.76. The 24-hour change we have is minus 9.45%. So we've dropped roughly 10% in the past 24 hours, shaving off around $800 of the Bitcoin price very quickly. So Ethereum is at $46,817,207,000. Current price standing at $467. 24-hour volume at 2.2 billion. And the price fell harder than Bitcoin at minus 11.34%. Ripple is at $19,141,936,000 in market capitalization, current standing price at 48 cents. 24-hour volume is 338 million, and we have dropped 8% in Ripple price. Bitcoin Cash took it the hardest, except for EOS out of the 5. Dropping at 13.9%, total market cap standing $13,049,005,641. Price at $758.75. 24-hour volume at 588 million, and again a minus 13% drop, so it took a pretty big hit. EOS, the biggest loss out of the top 5, is down almost 17% today, and current price is $8.72. Market capitalization is $7,812,236,000. Volume is $1.2 billion. So we've had quite a bit of a little panic over the past 24 hours in the crypto space, and you know, this is very common, especially in a major downtrend since the beginning of the year, to have some shakeouts. When we near support, it goes up, and then we shake out some sellers, and then it goes down, and we shake out some buyers. It's just the way that markets move. They kind of have to scare everybody over and over and over again before finally the weak hands are out. And the second that the weak hands are out, meaning the people that can't hold on to their investments and understand market cycles and allow it to do its thing, once they're shaken out, usually that's where you get a reversal. So the total market capitalization is falling onto support currently. The major support line that we saw back in the April zone is $244 billion, and we are now falling towards the $255 billion mark for the crypto space. Now, what's interesting about this is when we are reaching these lows at the $250 billion, $240 billion range in April, we were really only experiencing $10 billion in 24-hour volume in this period. You know, the highest we saw was right here at 14 billion. I'm pointing this out because if we hover our mouse over current prices and current area, we're seeing close to 15 billion and $17 billion in volume today. Volume generally is a great indicator for when there could be a bullish reversal or a bearish reversal. If a large volume spike comes in at a failure of support, then you can generally expect more downward movement. If a large volume spike comes in at the breakout of resistance, you can expect more upward movement to come. Now, as far as the crypto space goes, landing directly onto support right now with a volume spike is actually a very bullish signal until the $244 billion mark is broken. So if we have a failure of the $244 billion mark in the total market capitalization, it wouldn't be out of the crazy to see 170 billion in market cap again, or 180 billion, or 200 billion. We could lose another $50 billion Now, what's interesting about that is at the top, we were at $800 billion in market cap. So if you think about us being at a $250 billion market cap, only losing another 50 billion, yeah, that would be a little bloody for a week or two. But as far as percentage goes, it's not that much further down. The majority of the correction is already over. And this is why it's so important to accumulate panic and to understand the major trend, because the major trend is extremely bullish. So even if we have some selling off, and even if there's a support failure, you just buy more crypto. You accumulate, 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 average in. It's way less stressful than going 100% in at once, and you'll make way more money doing that. So the total market capitalization looks good. The panic is normal. This is a standard shakeout, and Bitcoin is still holding support inside of its support and resistance range of its triangle. So until we have a clear breakdown below 5,800, I don't expect to see downward movement. And again, the market cap number to be watching is $244 billion in market cap. This could easily be a big double bottom formation, but if 244 fails, again, we could see another 20% drop in the market. Bitcoin would go closer to 5,000, and it would provide another spot to accumulate some, add to your long-term positions, and let the market continue to play out its cycle. Because this is either at its bottom or near its bottom of its market cycle. It's already corrected 70% down, so there really isn't much further it can go. The worst I would expect this is an 88% retracement. That happens in altcoins sometimes, and that's very unlikely to see that happen due to the fact that altcoins have already done their 88% retracements of their market cycles and are bottoming out, and Bitcoin is completed in a full Wall Street cheat sheet market cycle. It has the potential for one more low to 5,000, but either way, the market cycles are putting very high probability that the bottom is near, and we're expecting a reversal, and we'll be headed up to new all-time highs before the end of this year again. So the market overview, everything's good, everything's looking normal. Bitcoin dominance is at 41%, and again, that 24-hour volume's at 17 billion, which is an increase from the lows that we were seeing in April, which for now is a bullish sign unless there's a support failure. Awesome. So now let's talk about Coinigy, because there's a lot of questions about this. I get DMs, should I sign up for TradingView or Coinigy? What's the pros? What's the cons? I've been using both for years now, about a year and a half for both of them. And I must say that they're pretty similar, but there are some things that you'll want to know so that you can decide what one's right for you and what you would like to use, or both of them. I personally use both of them because I support both companies, but that's what today's video about. Let's get right into it. So Coinigy, if you haven't heard of Coinigy, it is very similar to TradingView. In fact, it uses the TradingView interface, as you can see, the TradingView interface, very similar, all the same tools that you can use, has all the same indicators. You can compare symbols, you can adjust your candlesticks the same, you can adjust your time frames the same. It says right here, charts are powered by TradingView. But there are some differences here, so let's go over those. The first difference for me personally is that Coinigy allows you to connect to multiple exchanges that TradingView just doesn't have. So TradingView adds a certain amount of exchanges to their database so that you can do charting on it, whereas Coinigy connects to like literally almost every single cryptocurrency exchange you can think of and allows you to do technical analysis on those. So it's really nice if you can't find a chart on TradingView, you'll be able to find it over here on Coinigy instead. So, you know, it's got more exchanges, which is very useful for the technical analysis perspective. For example, let's see, Banca. Let's just look at Banca BTC or Banca USD actually. I'll just pull up this chart. This was one that I was getting requested for recently to look at. Now, as you can see, this chart pulls up very nice on Coinigy. You can move around, you can draw your Fibonacci retracement from the low to the high. You can see that we're falling onto lower supports. This is what I mean by an 88% retracement in its market cycle, what I was talking about earlier. This is the worst case scenario for a standard market cycle, and generally it just provides a really good buying opportunity. So either way, if you can think big picture in crypto, you're going to be fine accumulating all this panic. Now, as far as the chart goes, it's very nice, but if you go over here and we try to go to trading view and then we type in the same coin, Banca, crypto, you'll quickly see that we do not have this symbol. So that's just one example of how Coinigy will allow you to do more than TradingView does with that. Now, with this, you can also do alerts. You can also connect it to the exchange that you're trading on. So for example, if you have this connected to your Poloniex account through the API key, you can set a buy order. Well, it's not going to let me because I don't have the exchange connected through the API, so it says there's no balance due to no connection of an API key. But you basically just press this buy order here, and just like how this alert comes up, you drag at what price that you want to set the buy order, then you press confirm, and then as soon as it hits that price, your order will fill. So it's very visual, whereas TradingView, you have to look at the chart, come over here, do your TA, and then go over to the exchange that you're trading on, and then type in your buy order on the exchange that you're trading on. So it's a lot of switching back and forth between the two. Whereas Coinigy just allows you to do it all in one platform, set your buys, set your sell orders, and plan all your trades here. The schemes are very similar, like the way that it looks, like I said, you can also adjust all of the settings just like in TradingView. So if you want to change the color of your candlesticks, you can double click on it. If you want to switch to Coinigy candlesticks and analyze trends rather than analyzing standard candlestick method. Coinigy, short little thing here is for analyzing trends. It's a different type of candlestick if you're new to them. Okay, go back to candles. But overall, the platforms are similar, but Coinigy just has more features. But there is one downside. And this is a pretty big one for me personally. This is on the cons list for sure. If I try to do a chart that I want to play back later, I can't do it with Coinigy. So with TradingView, I can click on screenshot, or I can press publish idea and come back later and I have a playable chart that allows me to see how well my prediction did in the past or the future. Now, this isn't a big deal if you just open a Google Docs and screenshot something that you're doing in Coinigy and paste your screenshot, and then you can just come back and visually see what the prices are down the road. But it is definitely a downside for me because I love to make those playable charts and come back, and then if you make a really amazing prediction, it's way more visually appealing to share it and show it off to somebody when you can click that play button and they can see just how accurate you really were as the candlesticks load to the right. Now, for this case specifically, again, you can open up that Google Doc, you can make your screenshots, but you're not going to be able to see how well it did. You're just going to be able to come back and look at the chart later and be like, okay, I did really good. The price went up from here. But again, you don't get those playable buttons like I have on TradingView. So that's one thing to be aware of or take note of. But I think that it really gets balanced out by the fact that you can set your buy orders, your sell orders, and you can do all of your alerts on here, and then you have access to way more exchanges. So it kind of, you know, it's a balancing act for me. I technically use them both pretty much every single day. Now, Coinigy is nice. It has SMS alerts as well, the alert system. So you can just have it text your cell phone. It will say Coinigy alert. It'll tell you what exchange the coin had the alert on. It will tell you what price that you set the alert for and all that good stuff. You also have Google Sheets integration, so you can connect your Google Sheets. There's some Newswire if you're really into trading news, which I completely preach against, but just for you people that technically do trade news, crazy folks. You can do the Market Watch so that you can do portfolio and trends. What's really nice as well is if you click on accounts, this is where you can connect your API keys. Currently, I do not have any APIs connected, but if I do have an API connected, you can go back to the Balances tab, and it will make a pie chart of all of your holdings. It will tell you how much your total holdings are. You'll see how much is up and down. You'll be able to look at it in all different formats here. There's a table view, and then you can click on the chart view. But because I don't have any data, it says you have to have at least one account selected. But it'll tell you what percentages you're holding in each one, what your biggest gainers are, what your biggest losers are, and all of that good stuff already integrated into the system. As well, you can change the theme. Let me see, it's right here actually. So you could, if you don't really like this background that I have on here, you can click on it and maybe change the color to ocean waves, you know. And so it's a little bit more visually appealing than TradingView as far as that goes. Okay. Now, again, they're both really awesome. This is how the trading interface works. So you can just add your API from whatever exchange. You type in how many dollars you want to spend. You type in what price that you're trying to buy the coin at. And then you just press buy now. And then it'll add it to your little list here. It'll notify you when a trade gets made. You can take notes on the trade if you're like, I actually think that this is going to go down. So yeah, one more thing here. You can also click on the market depth and zoom into different things. Pop up, check out how many buy orders, sell orders are stacked at different places. It's a very awesome platform. I prefer using both of them, although I use Coinigy a lot when I'm doing TA on other exchanges, and it is super nice to be able to connect your APIs to it and trade all in one place. And then, you know, the buy walls are better than on TradingView. In my opinion, these buy walls are way better to look at than the TradingView buy walls. As far as the series go, you can also just click on this. And for candlestick pattern traders, you get this very, very nice series mode where you can hover your mouse over each area, see the open, the close, how much volume was on each candle, and give you all that good data, whether you're trading daily candlesticks, minute candlesticks, which are really jaggedy on HIT BTC because there's no volume, or hourly candlesticks. And, you know, so it's got everything that you would really need to be proficient in your trading. Now, as far as pricing goes, Coinigy is cheaper than TradingView, so that is a plus if you are not trying to spend all the money that professional accounts cost on TradingView. Coinigy is going to be the cheaper option. The only downside is the lack of playable charts, so you can't make one that you can come back and press play and see the price prediction. But again, you can still make those screenshots. So as long as you keep your screenshots saved in a Google Docs, then you're fine, because you can just pop up, look at the price that you bought at, look at the price that you made your TA at, and then go check on the chart and see how well you did from there. So yeah, that's pretty much everything we wanted to go over with the Coinigy. It's really awesome. I highly recommend signing up for it, even if you just check out their trial. I believe they still have a trial running currently. Now let's get into the crypto flaw debunked for the week. And this one is Facebook shutting down crypto ads. And this is, you know, something that we had asked by Tom K542 in the comment section in the previous episode of Craving Crypto. He basically says, so you talked about the government banning crypto. What about companies like Facebook blocking anyone from promoting blockchain in any way, shape, / form? Can you talk about why Facebook might be banning all crypto-related posts? So this actually hasn't fully went into effect. Facebook has talked about this. There's a little bit of a dilemma in people and FUD. Everybody's scared because, oh no, what if all the advertising goes away for cryptocurrency? What if you can't promote? What if you can't do ads on all of these major social media platforms? And personally, I think that it's mainly FUD, right? So even if Facebook or Google temporarily banned it, I promise you that they're just doing it to temporarily either manipulate price, or they just don't want to get stuck into a regulatory bind before things are very nice and regulated. So what's interesting about this is the fact that people love to blow it out of proportion, because there's still crypto ads on Facebook running currently. I've seen them, you know, recently, and there are still ads on Google that are running that are crypto related. So it's just like a lot of rumor and talk right now, and it gets kind of blown out of proportion quickly because people are scared of the idea of it. So even just the fact that it might happen, people start to sell. And that just goes to show how easy and weak-handed people are. The second they have any reason to act on fear, they will. Whether it's a news article, whether it's the potential of a company banning it, whether it's the potential of the government regulating it, they just want to press that sell button. They want to have any reason to sell. A lot of people have already been losing since the beginning of the year because, you know, due to the hype cycles, a lot of people bought at the top of the market, which if you did, you know, that's okay. You're just new to all of this. It happens, you know, and just keep a clear head and allow yourself to learn market cycles. But it's okay that you do that. So when it's dropping like that, and if you're losing money due to the correction, it's really easy to find any reason to want to sell or any reason to go back on what you told yourself you would do, your trading plan. So the Facebook ads and the whole idea of maybe Facebook or Google banning crypto related advertisements is something that you have to just be aware that it's a FUD. You know, it's people trying to get scared. You know, it's an emotional reaction to the price. And until something actually happens, it wouldn't really affect it that much. And even if it did happen, again, this is decentralized, this is immutable. Few companies can attack it, even few governments can attack it, but the jack is out of the box. The idea is here. And now that so many people are in love with Bitcoin and cryptocurrencies, you can't stop a movement. It will go where it needs to go. It's gonna play itself out. It's created a path for itself, and that path is only getting deeper and deeper as more development happens in this space on a daily basis. Thank you so much for tuning in today's video. I hope that you learned something. Always drop those comments, drop those likes. Let me know if you have any questions. You can use my email or whatever you prefer, and I appreciate you tuning in today. As always, stay profitable out there.